I was just looking at the headlines this morning, Atsi. I mean, the kind of sell-off that one has seen across commodities, the global rout, doesn't seem like Raghuram Rajan is going to go ahead with anything more than a 25 bips cut.
Well, that certainly seems to be the consensus of the market. I believe a 25 basis point cut is what is expected. And, regardless of what's happening in equity markets or capital markets more generally today, if you look at where India's growth recovery is and where the inflation trends are, clearly monetary policy easing seems to be justified by those. At the same time, I don't know that there's a requirement for more aggressive easing than a 25 basis point hike. So I think India's own fundamentals might be what drive the action today rather than the capital markets volatility.
Atsi, do you think rather than getting obsessed with what Reserve Bank of India will do and should do, we should focus on the underlying economy? And the underlying economy is that so far the investment cycle in India has not picked up despite a 75 bips rate cut. Corporate India is not ready to spend, and those who want to spend, perhaps they don't have the balance sheet strength.
Yes, I think the short answer to your question is yes, that while monetary policy is certainly very important at the bottom of a cycle in sort of pushing that growth cycle upwards, monetary policy cannot sustain growth by itself. And you're right, some of the reasons why the economic recovery is slower than had been initially anticipated, they're global, and we know what those are. But some of them are domestic, and as you pointed out, some of them have to do with leverage in the corporate sector, which prevents the corporate sector from going out and investing more, given their balance sheets are already pretty big. Second is the banking system's balance sheets. Those, again, have a fairly high proportion of non-performing assets, and that makes it difficult for banks to be the vehicle for monetary policy transmission, as is traditionally the case. So I think those are both very domestic structural factors that will have to be addressed before the growth cycle really can said to have turned. The third factor that, again, is alluded to a lot more is, of course, the infrastructure and regulatory constraints on India's growth. These have been around for a long time, and they're likely to persist, but the amount that government policies can sort of chip away at those would certainly be helpful at this time.
So, Atsi, what's the outlook on India at this current juncture? What is your last rating on India, and what's on the watch list right now in terms of a data point that would make you review the rating?
Sure. As you know, we're at the rating for India is Baa3, which is about the middle of the rating range. And if you look at India's size and growth rate, the question you might want to ask is, why isn't that rating higher? And we do indeed have a positive outlook on the rating, because we think some of the factors that kept that rating down at the middle of the rating range, which were the policy environment, the inflation, both the level and the volatility, the fiscal position of the government, some of those are indeed being addressed. But to your point, what would make us change the rating in an upward direction? I think it would be more evidence that the structural reform, which is very high on the government's agenda, is actually being implemented. The conditions for doing business are actually being eased. Private investment is being encouraged both through the infrastructure as well as the regulatory regime route. Those are some of the things that we're looking at in order to determine whether the rating should indeed move a notch higher.
If I look at all the basic government data points, which is the spending on infrastructure, the commitment towards increased capex in railways, the commitment towards building more roads, the spending is clearly on uptick, and there is a double-digit to a triple-digit uptick. So when will the government spending or public spending really translate into numbers?
Again, that's a good point. And, some of these things do take time. So between when rate cuts happen and when private investment picks up or bank lending picks up, there is generally a few quarters of a lag. Similarly, between when the government announces its plans and those plans actually get implemented, and then those plans, once they're implemented, drive the private sector to begin its investment, that is also a few quarters. So I think given where we are in the cycle, we can expect that by around this time next year, we should see both in the capital goods data, both in the investment data, some effect of what's happening on the ground now. But again, the extent to which we'll see an uptick in those numbers will depend on the extent of sort of urgency with which these spending plans are implemented.
Atsi, what about this global rout lot that's taking place. The ongoings in China right now, the fact that Fed up until now has held fire. Would that have any repercussion on the India outlook? Because equities definitely are shaken up here.
Yeah. Well, I think India is an interesting place at this point with respect to the global environment. On the one hand, slower growth in China has meant that commodity prices are lower and will remain low for an extended period. And that is definitely a clear benefit for India, both in terms of growth, in terms of inflation, as well as in terms of its current account balance. So that's a definite positive. The other aspect of China's slowdown and the general view of emerging markets and risk perceptions of emerging markets is that capital flows, which flowed quite well and easily into emerging markets over the last, say, 4 or 5 years, and even beyond that, those flows are now turning the other way. And the extent to which India can retain the flows that have already come or attract even more flows will depend on whether its growth outlook continues to outperform. Our view is that India's growth will likely outperform other emerging markets, given how poorly some of those are doing. But for that to translate into profits, to translate into investor sentiment, I think policy is the key ingredient. So the extent to which India can stand out, not just in terms of growth, but in terms of the hospitality towards private investment, I think that will determine how it performs in the current environment.
We like it, we don't like it, it's a flat world. And what is happening in China will have impact on US, and what is happening in US will have impact on ECB and India. So in an environment when global growth is contracting, India's export is not looking strong. Do you think the growth assumptions will get seriously challenged? Frankly, nobody was expecting such a benign global environment or global growth environment. Now a reset button has been pressed.
Yeah, we actually did revise our growth projections down for this year. We had initially thought the growth would be around at the 7.5% mark. We're now saying it'll be closer to 7%, in fact, flat 7%. And that's indeed what the first quarter data are showing. Now, you're absolutely right that exports will not provide the fillip to growth in India. And there have been times in the past when exports have done so, but that is not going to be the case. India is slightly better off compared to other countries where domestic consumption and domestic investment are not primed. So this global rout, as you've called it, is occurring at a time when India is at the bottom of its own business cycle, and its business cycle is actually poised to turn up. This is a little bit different than other emerging markets, which were really at the top of their business cycle perhaps a year or two ago, and their business cycle is slowing down. So I would say that the timing matters, and India stands to benefit from being at the bottom of its business cycle. But you're right. Will the global environment play a supportive role in terms of promoting growth? No, it won't. It will have to be domestic demand that plays that role for India.
Okay, Atsi, always good chatting with you, and thank you so much for taking the time out and speaking to us today.
Thank you for having me.
At facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.